Good afternoon, everybody, and welcome to Trending Thursday. As you can see, I've got a guest today. He's not a guest. He's just a guy. And his name is Ryan. Ryan, thank you for being here for Trending Thursday today.
Thank you for having me, Glenn. It's an exciting day. We got big news coming out today.
Right, we do. And a couple of stocks that hit. Palantir, that's one of my stories today. XRoth, I'm trying to get back into it. Big move on XRoth today. Ryan will class up the act, whatever. Mess around. I will shut this down right now. That's the way I will shut down Trending Thursday.
Big move.
Yeah. Right, I don't know what the news is on it. The Federal Reserve, there it is. I got it. Put me on to the screen, to our main screen.
You want to talk about a bag? I did a video. Only video I've ever done on XRoth. Was it yesterday or the day before? 10 cents. Now it's at 17 cents. Phenomenal move.
I'm loving that. Almost a bag. Clay, put us on the main screen with the both of us. Because the news just came across. Not that one.
Fed decision was unanimous.
There we go. Fed Reserve cuts interest rates by one quarter point.
Hey,
can't hear Ryan. All right. So, did you bring the gain down? Maybe you brought it down too much. Oh, no. Did you get an apology for Glenn on ARM yet? No. ARM is down. So, no, he's not getting an apology.
Up.
It was down. Is it up?
Yeah, it didn't last long. We saw it as a buying opportunity.
All right. No, I'm not giving him an apology for it because Palantir is a much better stock. So,
God, you give this guy one bag.
I've had more than one bag. I've had more than one bag, bro. I've had more than one bag. That's all right. I'm not here to talk about my bags except for Palantir. But everybody's saying, Ryan, turn your mic up. Palantir is down today, but you know something?
Is that better? Can everybody hear me?
You know what's going on with Palantir for me, Janice? I'm up 101%. I'll take it. ARM is not a bad play. All kidding aside, ARM is a damn good play. It really is. It's a really good play.
I mean, both of these companies are in hot spaces. Cybersecurity, computer chips.
NVIDIA, AMD. A lot of these stocks are in hot spots. So, Ryan, XRoth is up. How long should you stay invested in this? I got to find out what the news is. Hold on. I'm going to take the mouse, Clay. I'm going to go and find out.
I could almost see XRoth as both a trade, obviously because of the momentum, use moving averages, trailing stops, something simple. Don't overthink it. Or investment. There's not too many penny stocks in the VectorVest 7 system that are undervalued.
One day ago, XRoth announces upcoming Analyst Day with Q3 date. I don't know what the news was on it. Oh, Ryan, he took the mouse again. Hold on. I'm going to take it.
Take it.
I'm going to see what the Yahoo Finance says. XRoth announces upcoming. I don't know. That was yesterday. A leading clean, Stellantis, that was a while ago, though.
Because I know that Stellantis, that's the big news. But, I mean, like you said, that was a little while ago.
Yeah, that was, and Stellantis actually helped to pull him down because then Stellantis started going down. But someone says, took some profits off of Palantir. Somebody else says, keep holding Palantir or sell. Let's go to the first story that I got. Where will Palantir be in 3 years? All right. Someone said that Palantir
$1 million.
Ooh, I like that. Palantir's Q3 was smashing success. Look at the price of the stock. Palantir's commercial segment is growing rapidly. Palantir's biggest issue is its valuation. A lot of people are afraid to get into Palantir because it's way overvalued. And the answer to that, why it's overvalued, is because people know what I know about the company, throwing money behind Palantir, raising its price. So people, excuse me, sorry. If you're buying into Palantir right now, you're paying a premium. But so far, it looks like paying the premium is working out because the stock just keeps going up and up and up and up. Don't miss out on this. I don't know what that is. All right, but I got Palantir in my list of stocks. We've only got a couple of stocks apiece because after in a half an hour or so, the Fed is going to be talking. We're going to be listening to them live. So, Darian, that's right. The Fed cuts. Now, let me put this question out there, and I did this on AMA yesterday. I think that the euphoria behind the election makes the market, makes the economy look better in anticipation of things to come. If that's the case, I am curious to see if we get another cut in December, or will he pause? Will we get another cut in December, or will we pause? Fitz says, do you have a trailing stop on Palantir? Yes, pretty much. In essence, I think I have what we would call...
you have a mental trailing stop.
I do. It's a 10% trail. Pretty much it's a 10% trail.
What you're not supposed to do.
Yeah, I know. But right now, based on that, if Palantir gets down to 100, for me, 100%, I think, if anything, I'm going to take half off the table. I've got a lot of profit built in to the trade. So if it gets down to 100% gain, right now, the highest I had was 110. If it gets down to 100% gain, I'm probably pulling half off the table. I still think Palantir is a great stock to hold long term. Someone says Palantir is the next NVIDIA. I think those are probably two of the hottest stocks on the planet right now. Two of the hottest stocks on the planet right now. This cut in interest may reignite inflation. Ta-da! And if inflation starts to rise, does the Fed still have the wherewithal to cut in December? I don't know. All right, so the next story
Inflation's next week.
Say again?
Inflation data, CPI data is next week.
Yep, and then we have another rate decision in December, the last one for the year. The next story in here comes from our website, the www.vectorvest.com. Let me click on it. This is what our website looks like, right? Right here. And if you're not a subscriber to the software, you can always take a 30-day trial right from here. But if you put your mouse on articles, we put out articles just about every day. Swing trading, options, stock market news, retirement. But if I just click on articles again, or just click on it, story came out today. ARM holding stock falls despite strong Q2 earnings. Should you buy ARM? I'm going to bring that up, and I'm going to let Ryan talk a little bit about that. He just did a short on it, so talk about it. Joey's not here, Charles. Today we have Clay in the background. Joey's taking a little bit of a vacation.
He's taking a little hiatus.
Yeah.
But yeah, as far as ARM, they beat top and bottom.
Right.
Earnings, revenue. They slipped. I don't know if everyone saw this morning. Pre-market was down about 3%. The reason why? Soft guidance. But the guidance really came in with expectations, pre the earnings call. But I was just looking at the stock. It's up now. So I think, that dip this morning was seen as a buying opportunity in the stock. More important than the earnings call, they have a little bit of a quarrel with Qualcomm right now in regards to
Qual?
Huh?
They have a quarrel with Qual?
That's a tongue twister. But essentially, they're going to court next month. ARM licenses their ARM architecture to Qualcomm. They're essentially, ARM got a better deal for another company, and now they're trying to, back out of the Qualcomm or renegotiate. We'll see. I think that's more important than the earnings, but with the enthusiasm that I'm seeing today, I don't think ARM's run is over.
Quick question.
Are you eating something?
Yeah.
What are you munching on?
Can you hear me?
You eat on a live stream?
Well, Skittles. I haven't eaten lunch. I'm freaking hungry.
You're a child. You're a child.
David says, Glenn, Ryan, what is the next app or Palantir? So between Ryan and I, Ryan's got a video coming out tonight on low dollar stocks to keep your eyes on. Tomorrow, I've got the Friday video is going to be looking at speculative stocks to keep your eyes on. So, David, great question. And I think between Ryan's video tonight and my video tomorrow, we could be harping on one of those two type-like stocks, either app or Palantir. So make sure you watch tomorrow's video. Make sure you watch tonight's video, because I think between Ryan and I, we're trying to put you in some stocks early that could be the next app or the next NVIDIA or the next Palantir.
And if you're going to give low cap stocks a try, I mean, with a fresh interest rate cut,
right,
enthusiasm in the market, elections behind us, going into the holidays, possible Santa rally, now would be the time, in my opinion, to take on a little bit more risk. And so, Glenn, I think, like you said, we're on the same page there.
The both of us are on the same page. So you got to watch tonight's video and you got to watch tomorrow's video. All right. Next story I brought up, Boeing finally, the machinists return to work, boosting local economies in Everett and Renton. This is big for Boeing. Boeing's got all the bad news going down their way. And in lieu of Boeing going down, most likely in price or has been, Embraer or ERJ and Airbus are two good stocks to pick up in that space. And I'm actually pushing more towards Embraer, which is ERJ, more so than Airbus. Contracts are coming in because Boeing's missing out on them. All right, because but this, this strike was huge for them. And now getting, let's go see. On Wednesday, we talked about owns, no. I wanted to see what the deal was, how much they, all happened. It just says that they're finally back on the job. I'm probably going to do a short tomorrow. I don't do many shorts, but Ryan does. I might do a short tomorrow in regards to what they agreed to get them off the strike. So we'll see that. All right. Next one is Ryan's story. Qualcomm pops as Chipmaker's earnings and revenue beats.
Yeah. I was looking at the semiconductor stocks in general. They're up. And then one of the reasons, obviously I always do semiconductor Thursdays for the 6 p.m. slot, but Taiwan Semiconductor, a gap down yesterday, right? Concern for tariffs, logical reason why people might sell. Taiwan Semiconductor, with the new, president coming into office next year with new policies, but I saw TSM today, it's up over $200. Qualcomm, it did gap up, started to recede, a little bit opposite than ARM, but Qualcomm, I still see this as a great stock. Chip makers in general, great space to be. Pretty much all the stocks are showing momentum to the upside. That's why I wanted to put some stocks in the semiconductor space that you probably never heard of before in tonight's video. But as far as Qualcomm, they beat as well. Earnings, they beat on revenue. Forecasted guidance, came right in par. Everything looks great there. So as far as, semiconductors reporting this week between them and ARM, no, concerns there, at least coming out or, denting any kind of sentiment for the bulls right now.
Roger says, I read on FaceCrack today that Elon bought Ford. I think that's what they call fake news.
Fake news?
I think so. All right. That's all the stories that we had today. The Fed's going to come up in about 15 minutes or so. And we're going to get ready for that. We're ready. We've got the live stream ready for that. And what we're going to do, let's go into the system. Let's go into the VectorVest software. Look at today's move. All right, let's go to the home page first. The Dow is slightly down. The big mover is the NASDAQ. All right, the tech stocks are on the mount, up over 1% today, and I bet you, volatility is still falling. So I think the videos that Ryan and I both have between tonight and tomorrow fall into place that people are not fearful. They're willing to buy the riskier stocks. So the next two videos for the next couple of days, the next two 6 p.m. videos, it's going to be ideally suited for those that don't have, that don't have a ton of money in their trading account, that they're still looking to make big moves. One of the biggest reasons why Palantir caught my eye is because it was a low dollar stock that had an RV above 1. I think between both Ryan and I's video, we're going to talk about the power of RV in looking at low dollar stocks, how important that is. Palantir played out. There's going to be a lot of stocks out there that may be lower dollar stocks, but if you pay attention to the upside potential or relative value on the stock, you may be putting yourselves in a great spot. Somebody says they've been trying to use VectorVest to find the low dollar stocks, but they've been losing money. I think that if you incorporate some of the proprietary indicators that we have within the VectorVest system, you're going to put yourself in a much better place. Janice says, Palantir got me full bag hour featuring Glenn, the Skittle chewing guru. Wow. Did you see Yang today? Ryan and I talked about that.
It dropped hard today.
Oh, did it really?
Yeah, it went from about $74 to $60.
Oh gosh, let's go look at since I got the 7 open. Let's go look at our portfolios because I think we both picked up Yang yesterday, right? Ryan's picks long. He's up. Look at that. Gain loss. Wow. So AMA, mine, I'm only up about 0.2%. Do I have Yang in here? I do not. Something tells me I might have sold it. Trade history.
I think I took iBet, I think.
I wonder if I sold it. Close. Yep. I got out flat. Interesting. I got out flat on Yang. That's a good thing, so I didn't lose no money on it. But my portfolio is only up a little bit. Ryan's portfolio is in the green. Nice move.
Look at you.
There's ARM. He's got an ROI of 4.5. Let's go see what biggest move is. Marvel, which was a great call for you way back in late September.
31%.
31%. Look at that. Amazon, Google, CBRE, all 4 stocks up double digits. Look at that earning. Look at that equity curve. Killing it. Killing it. ARM is up 4.5%. The only 2 that are down are TJX and the utilities. But Ryan's killing it, whereas I'm still in the negative, down 1.4. My equity curve doesn't look as strong as his, but it is moving higher. I've got 2 stocks that are in double digits earnings, Netflix and BlackRock. My 2 ones that are hurting me are, we were both in utilities. We were both taking a hit there.
The utility was defensive. So if the market would have pulled back, utilities probably would have done a little bit better.
So that was interesting. Let's go back to the graphs. There's the market back in the uptrend, a little bit of indecision today. Let's go look at Yang. All right, I'm still with Ryan. I'm bearish. I am bearish. A big drop. You're right. Look at that 3-month big drop into the slow lane by way of the star search. All right. I'm still a believer in Yang. It got me out because it hit my stop. It got me out. I'm still a believer. I'm not fully vested behind Chinese stocks right now. Yang got no bang. Wow, Janice is
She's on point today.
Right. Poopy is a Glenism. The book with all the technical words in the works. I had somebody write my book for me. I don't know where it is. Somebody took it off my wall, my book of Glenisms. Oh, that makes me sad. App did well today. App is going to be in my video tomorrow. App is going to be in my big move on that. App is in my video tomorrow. This is going to be the only non-low dollar stock. Now, I'm going to tell you, be careful with it. It broke outside of the Bollinger Band, a little wick at the top. All right, just be careful with it. If you're in it, I'm going to give you a good hard stop right here at the gap, about 177.47. That's a lot of money to give back, though. That's a lot of money to give back. If you want to use today's low, which would be 226.97, either one of these.
I say if you bought it today, I would use today's low.
I'm with you on that, which is be the 226.97. And let's go look at ARM. All right, let's go look at ARM. ARM didn't look so good this morning, but now look at that. Nice move, Ryan, coming out of the slow lane into the middle lane, touching just the bottom of the fast lane, but nice open candle on beautiful volume. That's the kind of play you want. Glenn, can you give your thoughts on Zeta? I don't know anything about it. Why am I looking at that? Because you asked me to? All right, Zeta. It's got earnings win. 11.11. Nice move on it.
SQQQ is shorting the NASDAQ 100. And I can't get on that bus right now.
Yeah, I wouldn't either. Not right now.
I think that's just going to cause you more trouble than it's worth.
I do like the move on Zeta. Nice move out of the slow lane into the middle lane. I don't like the fall in volume, but the volume is still commensurate. Write that
prior
down.
to
That's
that
word.
dip.
That's the word of the day. Commensurate with a lot of the other standard days. So no wick at the top. Very little wick at the top. Nice open day trading at session highs. I do. What time is it? 2:20. Is SMCI a long-term buy? All I'm going to just do right now, Brenda, is just look at you. Because Ryan said it yesterday. What did you say, Ryan, about SMCI?
It is dead to me.
Okay.
Now, I had, when it was around $30 or so, there's a little bit of optimism, maybe some bottom fishing. But when it dropped to 20 and just more negative news coming out, I mean, they couldn't even do their earnings because they're in such a
It's
mess.
because they ain't got no auditor.
They ain't got no auditor. So I am staying out of that one. Mark Norton says buy
SMCI. Check. Don't.
Yeah.
No. He's trying to get us in trouble.
Don't listen to Mark now.
He's trying to get our talk show
If you listen to Mark,
trouble.
just know you're taking on a whole lot of risk.
AMD. All right. So before the Fed comes on, I did write down some stocks.
I like AMD.
CLS
AMD's
looks
moving
good.
up past few days.
Huh?
AMD's been on the move lately.
Well, it's in here as well, I think. CLS looks good. CLS, look at the volume. Rising volume, a little lower today, but I like the play. I do like that. I think AMD is in the list. It is. AMD is in the list. All right. What else is in here? Tesla. Man, didn't you talk about Tesla yesterday?
Yes.
Tesla's on. I don't know what. I think.
So I said Tesla would be a good play. Why would it not be?
Well, it's because him and
the CEO of the
Trump
company
are buddies.
is buddy with the new president. So, I mean, I'm just thinking logically here. I think there might be some benefits in that.
All right.
Just
Let's
saying.
go look at the next one. Remember, we only got a few minutes before the Fed comes on. QT, is this an earnings play? Something tells me it is. Big move. I love the move. Bottom left, top right.
Follow through today. Look at that.
Look at
nice
that.
body on that candlestick.
Watch that is broken outside of the Bollinger Band. If I'm going to give you a hard stop on it, because it's going to most likely come back in to the Bollinger Band, but I'm going to give you a hard stop at about $92.16. That gives you a little bit of room here. Gives you a little bit of room. Any update on the new, that costs G-Money? Yes. Actually, Steve talked about, I think he talked about updates in the sneak peek. He did 2 sneak peek videos yesterday on YouTube. Go check them out. All right. Bought SMCI April 25 calls. I think acting and legal issues may be resolved by then. I'm not ready. I think SMCI is in a good space. I just don't know if its troubles will curtail its move to the upside.
Yeah, we just don't know, A, if the allegations are true.
I think it's coming more true.
Or B, how much cooking did they do when it comes to their books?
I agree with that too.
And depending on how, what the cooking really came down to depends on the new valuation of the company. So essentially, you're just betting that they didn't cook enough to where the company is completely worthless. So they're still hoping the company.
Yeah.
We'll see.
But G-Money, the cool thing about the new web-based software, the education department is putting a lot of insight into what we're looking for into it. I think this is going to be a huge thing, the new software. All right, Annette hitting new highs in the fast lane after earnings. T-Doc, even after earnings, the stock is in the channel.
Yeah, nice, yeah.
It's in the channel.
Pretty range bound there. Yeah. Not doing a whole lot.
In the middle lane on the star search, so I'm not feeling real warm and fuzzy until we can break above this level of at least $9.82. Glenn, are you still in IESC? Not right now. I am not in IESCs. I've got the majority of my money in, where am I? Not that one. Did I close it?
Yep, now I'm looking at something else. I can't see nothing on your screen. There we go.
Oh, no, I know.
Ramor says, when the auditor leaves, avoid the stock.
I believe on that.
That's not bad advice.
I agree with that. I totally agree with that.
If you're sticking around, just know you're taking on a lot of risk. It's very speculative.
We did look at Zeta. I'd really like to see if we could take out that 3-month high of $34. We're not far from it, but I love the move. I do love the move.
I mean, and look, prior to that dip, I mean, it was a nice steady rise in price action.
Yeah, it was.
Zeta.
Evidently,
Beautiful.
I've looked at it before because I got a trend line back here. But it did fall. I don't think that was an earnings call, but it did fall into the slow lane, now back into the fast lane. History shows that it spends a lot of time in the fast lane. I think that's just going to recur again. So probably got one more stock. There we go. AMD moving.
Look at that. Starting to turn around.
Yeah. Tell you what I see, though. Freehand line.
Not a whole lot.
Oh, I did an extended line. That works. Make that a little darker. And what I see there is a downtrend from the high. Mm-hmm. I'd like to see if we can break above this trend line and stay above it. We did break above, but we didn't stay high. And when we broke above, it did not get into the fast lane. I'd like to see us break above, stay above, and get into the fast lane on AMD. Now, one more. I'm going to do one more. Melly. A Melly. I could cuss, but I can't. Woo! What is that? Mercado Libre.
Yeah. I did a video on that stock a while back.
Oh, they must have didn't do good on earnings. That's not pretty.
If I remember correctly, it's pretty much like South America's Amazon.
Well, they ain't delivering.
If I remember correctly, I'm pretty sure.
One more. All right, one more minute.
Did they have earnings? They had to have earnings. Yeah, it was earnings. Ooh, big gap down. That's not good.
Here's Rail. All right, who just asked me for Rail? I'm not doing any more stocks after this.
Oh, come on, Glenn. Come on, Uncle Glenn. I want a stock.
Stop.
We got to look at X-Row.
Stop. We do need to look at X-Row.
We do
have to look at X-Row.
And SoFi.
Oh, Sugarfoot. All right, that's it. Don't put any other stocks in there. Rail, I do like
them. Sound? What about SoundHound?
No, stop it. Stop it.
Sorry, Jazz, I tried.
Bottom left, top right. I've done a couple of stories on Rail. I do like it. I like that it's getting back into the fast lane again. Nice open body, no wick at the top. No wick at the top. Why do you want me to look at SQQQ? I don't, Ripman, there's no reason. SQQQ. How much time? We got 3 minutes.
Buy puts on the SQQQ. You could buy puts on it.
I'm not, and it's split. I'm not thinking about SQQQ unless the market's going down. All right, I only got a couple of minutes. There's Melly, X-Roth. Look at that. In the fast lane. Woo-wee. Look at that move. In the fast lane. Life in the fast lane. Where's the alert?
I don't think X-Ro's seen the fast lane in decades.
Did y'all not get an alert for today? Type a yes or a no in the room. Did y'all not get an alert for today? Type a yes or a no in the room. I'm looking at how many people are here. I'm sure that y'all got the alert. Because Akshaya said, Glenn, was there an alert? Glenn, yeah. Jazz, I got 2 minutes.
But you know what I like about Rail is the value and the price are both on the rise right now. The company's still undervalued. I like Rail a lot.
I do like Rail. I'm writing it down.
We value the company at $16.08.
I do like that play, Rail. All right. No alert. See, I'm hearing some no alert.
Next one.
I don't know. It's
2 minutes.
2 minutes. Melly, there's X-Roth. There's SoFi. I own SoFi.
It gapped up. It's giving away the gain. Still in the fast lane, though.
It's still in the fast lane. All right. I'm going to bring up the graph of the market timing graph. Let's go make this a little smaller. All right. As we get ready for the Fed. Because we want to track what the market is doing. All right, so we're here. We're just waiting for them to come on. It's got like 1 minute left.
Yeah, 1 minute.
We got 1 minute left. Debbie is here. Hi, Debbie. Bring up the software. Keep it on the side. Let's move this
Mark
over.
Says, I think I got the alert while I was in the voting booth. I was told to vote on November 7th. Good job, Mark.
I got nothing. I'm not even getting into that. I got nothing. I got nothing. Intraday, 1 minute bars, current day. There we are. This is what we're gonna watch and track the market live, and the Fed's coming up. Clay
and Jen. The only thing I want to say in regards to your comment, Meta dropped after the election. That's all I will say there.
All right. I just want you to have the background noise on for them to hear.
Yeah, it is. The market not really liking
Rail earnings. November 11th. I like that play. I do like the play. I like what they do, and I like the move on the stock. All right. We're going to watch the market. Rail is a short prospect. Shame. Ooh, I'm not feeling that, Lou.
Ooh, same as X-Row. Lulu ain't got no faith in X-Row.
You got no love.
No love. Meta dropped, but up today. Hey, I didn't look at Meta. I'm going to take a look at Meta for that while we wait here. Meta. Oh, yeah, big day today. Full-bodied candlestick. Meta's at 592. It is above that downward trend line. So if you were going to buy the dip on Meta, the upward trend is still holding intact. I like Meta. Undervalued. I like Meta. I think it'll play out nicely.
Meta up here. There's SoFi. There's Meta. And getting into the fast lane. I like it. I like it. SMCI or Enron. I'm telling you, if all of
Jim
this
says,
comes
I think
true,
the market will go up regardless what is said by the Fed.
It all depends on what he says about cutting interest rates in December. And I think we're going to get some heads up. Here he comes.
There you go. And I'm curious about his inputs on the most recent jobs report.
Oh, yeah. All right, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
There's the
The
move.
economy is strong overall and has
Can
made
you guys hear
significant
it?
progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state
'Cause I
and
cannot
remains
hear.
solid.
I can hear.
Inflation has eased substantially from a peak
Can
of
you guys hear?
7%
Yes or
to
no?
2.1% as of September. We are committed to maintaining our economy's
Yes.
strength
Kim
by
says
supporting
yes.
maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point.
Okay?
We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings.
He
I'll
keeps
have more to
saying
say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter.
Yeah.
Growth of consumer spending has remained resilient.
People
and
are still
investment in
spending money.
equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on
There you go.
employment in October.
That answers your question.
Regarding the
Ryan.
hurricanes, let me extend our sympathies to all the families, businesses, and
Look
communities
at the market taking
who have
off.
been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures.
It's true.
Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer-run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%.
Okay.
This further recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks.
He says the same
We are
thing
not on any preset
each
course.
meeting.
We will continue to make our decisions
Same exact
meeting
thing.
by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Everything we do.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
That was poopy. It wasn't nothing
Thank
exciting
you.
in that.
Given the expectation that
nothing
the
at all.
election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that
Who else finds
in the
Powell
near term,
boring?
the election
Very
will have
boring.
no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate.
That doesn't
we
sound
don't
like he knows
assume.
much of
Wait a
anything.
minute. They don't
Now,
guess
just
or
in principle,
speculate.
it's
That's
possible
exactly
that
what
any
you do.
administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals.
Why does everybody
Janice says
think I'm a
snooze
de-
Along
fest.
with countless
Why does
other
everybody think
factors,
I'm a Debbie
forecasts of
Downer?
those economic effects would be included in our models of the economy and would be taken into account through that channel.
Watch the market. See, people are going blah, 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 blah,
Wall
blah.
Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around.
Ramore, you might be right.
And we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I'm
watching the market. He ain't saying nothing.
Something that we're watching. And again, these things
don't
really have.
Well, you would think that he would talk about the new administration, how this could weigh on the market, and how this could affect what he does.
Are those rate projections still valid? Do they still seem relevant given where we are now?
Am I right, folks?
You get halfway through the cycle.
Does it seem like we're missing what just happened? Type a yes or no in the room. Does it seem like he's not talking about anything that just happened and how this could affect what's going on?
I
don't know. That's what I see.
The revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished.
I got you, Charles. I'm with. I got you.
And so overall, feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was.
Glenn, I just got an alert. Another hurricane in the Gulf.
I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
I think Ramora is right. The market is uninspired. Okay.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you?
Well, I don't think it's going to be as inspired as it was yesterday.
Decision? And then, as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate.
You're right.
Look at that! All those gains from when he started talking. Now just hit a new session low.
Sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%.
Wow,
After
look at the
today's
market.
move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly.
SQQQ don't look too bad now, does it, Glenn?
Undermining our progress on inflation, or moving too slowly.
There it is.
Allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are. But that's the question we're going to be asking in September,
right.
and in other meetings.
He means
and
December.
Again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess
Jen,
when it comes
I'm
to
with
your
you.
own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things come in December. I mean, it's just. I would put it this way.
I don't think we get that interest rate cut
neutral
next month
stance, and that's very much what we're on. That has not changed at all since September, we're just going to have to see where the data lead us. We have a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that. Again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
That's very interesting.
Thanks, Howard Schneider with
Reuters.
I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes
The
in
Dow's
language?
still in
Is
negative
it meant to
territory,
open
down
the door
35
to a
points for the
December
day.
pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test.
He just said it, Ramon.
For the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find that. To find the right pace and the right destination as we go, and I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
I just want him to answer.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax law. It doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand.
We're a little bit range bound right now.
Passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time, and a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time, and of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time.
There's the
with
bullish
every
ETF on SMCI
constantly.
Nice move.
And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find 3 weeks later the 10-year was 50 basis points lower.
Broke the level of resistance.
So it's material changes in financial conditions that last, that are persistent, that really matter, and we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now, it's not a major factor in how we're thinking about things.
Interesting, Janice. A purple tie, not a red or blue.
Thank you, Chris Rugaber at
interesting.
Associated Press. You mentioned the
He went very
positive economic
neutral
data
today
that
on
we've
his
seen
side.
since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
Ooh, I like that question.
You're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing. And
Okay, I want to hear this answer.
But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate.
People are spending money.
We don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its higher its
No interest
highs
rate
of
hikes.
2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%.
Both of those
So
sustainable.
the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process.
I think
Overall, as I mentioned,
he's answering
we
the
believe
question
that
to
with
say that there may not be a
recalibration of our
cut
policy
in
stance, we can
December,
maintain strength in
because
the
if
labor
everything
market,
is
even
equaling
as,
out now,
our
there may not
policy
be a
stance
need to
enables
cut.
further progress toward our inflation goal.
Does everybody
Great.
get the
Just to follow
same
up,
thing that
could
I
you-
get out of what he
might
said, yes
cause
or
you to
no?
Pause rate cuts in December. What kind of economic data would lead you to that path? Thank you.
Does anybody get this? He
So,
pretty much said that things are
We
equaling
haven't,
out.
made any decision like that at all. But
I don't know.
So we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating,
Mixed
we'd be prepared
signals.
to move
Exactly
more
what the
quickly.
market doesn't want.
Alternatively, as we approach levels that
MV is
are
putting some
plausibly
good stuff in
neutral
here.
or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way. But
I got it, John.
It's something that we're just beginning to think about.
Thanks, Chair Powell.
Another big bounce.
So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Aha! Woo!
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the
I love
12-month calculation in
the
February,
content
we
from
should
you
see a
guys,
thing
man.
down. So
This
it'll
is good
literally be
stuff.
a bump up and then down.
I'm
We
loving
understand
this.
that. Overall, you see the progress on inflation, and you
Right.
also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods,
Housing.
which together make up 80% of the core
Okay.
PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific
what he just
meaning
said,
other than we,
in my mind, says they shouldn't be cutting rates.
Strong. We have the ability to,
I don't know what I
take
hear.
advantage of that as we try to navigate
Unless I'm hearing
that
something
middle
different.
path between the two risks.
Hi, Chair Powell. Craig Torres from Bloomberg. Two questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that
it's
relates
high,
directly or indirectly to the election. On the second one,
I see Soundhound up 21% right now.
Think about all the time.
They have earnings coming up November 12th.
I'll just say a couple things.
Big move.
There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's come down significantly.
You're not hearing the Skittles in my mouth.
From a year or so.
Skittles.
So we've seen a big change upward in unemployment. Sometimes that has meant
Glenn,
bad things.
taste the rainbow.
Far,
oh my gosh,
it doesn't appear to be. It appears that I wouldn't say that the labor market is fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you could say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But
we just broke through that little downtrend. 5
years. If you look at the NIPA revisions,
there we go. Looks like the Bulls are about to take off for the rest of the day.
Right at that 2 o'clock where we started.
Set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. But we don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
All right, we're sitting right at 3. Do you still want to listen, yes or no?
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
Dang.
No. Can you follow
What was
on?
that, Glenn?
She said,
do you think that legally
people have said that you should resign.
No.
What did you think so? I was like, damn, that was cold.
Michael McKee from Bloomberg.
And that was her whole question. And that
Look at
was
his
Talk
face.
a lot about what the data are telling you and how you are dependent
Well, I
on
mean,
the data.
he might get fired
in
next
terms
year.
Of forward-looking assessments of the economy, what are you hearing from CEOs or other officials?
you
around
guys
the
are
country?
done?
What did you hear today from the regional
Okay.
bank presidents about what companies and
I'm going to pause.
consumers think about?
All right, we ain't got to listen to him no more.
Remorse says, glad I'm not a day trader.
Holy smokes, that was so cold. So people are saying you should resign. What do you think the same thing? He's like, no. It's like, wow.
Clay, let me know when you fix my mic.
Now keep talking because you're just loud as all get out. Just keep talking. I can turn you down now. Go ahead.
You're good, Ron.
Okay.
Just turn me off.
No, I'm not going to
Glenn.
turn you off. I'm not going to
Turn me off.
All right. So ADMA, that was another one of my bags, by the way. That's another one of my bags. ADMA and toast. I like toast. I like to eat toast. ADMA,
Toast.
6-month graph. 2 days of indecision before earnings. We do have bottom left, top right. I don't know did I create my earnings graph again? I did. Boom. Here's my earnings graph. Love the earnings. Earnings growth fell, but on the rise again. Average volume. For it to be average volume high, a lot of indecision. Very interesting in relative safety. I like them to beat earnings. Where's sales growth? I like them to beat earnings and revenue. I just don't know what forward guidance is. My account is at all-time highs. Woo! All right, I love that. So before we go, as we get closer and closer to the end of the year, for those people who are here who are brand new, I want you to watch the chat right now. How many, and I always put myself out on a limb when I do this, how many of people here who have the VectorVest software have been able to make money with VectorVest this year? Just type a 1 in the room. All right? And this is for all of the new eyeballs that are in the room. I want you to hear from actual VectorVest subscribers. All right? I want you to hear from actual VectorVest subscribers, not just me and Ryan. All right? And for those people who are brand new to the room, you haven't subscribed to the channel, hit the subscribe button, hit the bell icon. This is kind of stuff we do every week. We do, more than when I was working, says Fitz. Again, folks, new eyeballs that are here, look at the chat. Look at the chat. These are real VectorVest subscribers. All right? Ryan, before we go, you got anything to say? No? Great. All right. So with that being said, you got anything to say, buddy? Go ahead.
On that note, no, Glenn,
Okay.
I know.
All right,
Good to see you too today. Thanks for having me on the show. Bye.
Okay, then. All right. We do this every time the Fed has a decision. We wait for the decision. We talk about what's going on in the market. We give you a couple of stocks to look at, and then we listen to the question and answer period. And we try to give straightforward. I love the commentary that you guys gave today. I love whether you agreed with me or not. I don't care. I love the input from you guys today. I love that. I loved it. I love that. Wow, Glenn, we always want to hear from Ryan. I know you heard from him.
Hey, might as well mute you, Glenn.
No, not quite. This is trending Thursday.
Before I go though, Glenn.
Yeah.
After hearing today's call with Jerome Powell.
Yep.
Do you think it was dovish? Do you think it was bearish? Or do you think it was monotone?
I think it was monotone.
I think it was too. That's why I threw it in there.
I think that he
a lot of uncertainty.
I think his answers, although they weren't forthcoming to a certain degree, I think that they're putting themselves in a position where they can say, we're going to pause interest rates cuts next month.
Mm-hmm.
I think. But a lot of people in here disagree, and I'm okay with that. I totally, I respect that. I think that the upcoming euphoria going into the next year is going to put them in a position where they shouldn't be able to cut. All right, so. And Alex, I'm with you. It was uneventful. I was waiting, I don't know. I'm waiting for one of these meetings where he comes out and says, F you. Woo! I'll be like, whoa! But he's not going to do that either. He would never do that. But I'm looking for something that knocks my socks off.
If he was going to say it, probably would have been to that person who asked him the question of,
should you be fired?
If there was ever a moment, that probably would have been the moment.
I think that what we're going through right now, Ramor, is the beginning, an early beginning to a Santa rally. So.
Yeah, I think the Santa rally is
I think the Santa rally is in play. I think that it's in play. All right. So now, for everybody out there who's looking at what's going on in the market, looking at what happened with the election, you want stocks, you want lower dollar stocks to get into. Tonight's video is going to be, the first video talks about it, and my video tomorrow is going to be called Speculative Stocks to Buy Now. Both of us, I think, are right on the same sheet of music. This is the time, if you're going to get into anything that's risky. You notice the VIX is falling. People are becoming more greedy. So we're going to try to put some of those stocks into your hands to pay attention to. And again, that's how I found Palantir. I found Palantir the same way. So we'll see. All right. When he was asked if he would be fired, I wish he put on a MAGA hat and said nothing. That would have been great. I got to go. I'm leaving y'all.
Well, I guess that would be the person who determines his employment next year.
Yeah, that's true. And I think he wants him to keep cutting. All right. And what that's going to...
From his speeches, I would... That's what I get, too. He wants lower interest rates, Trump.
Jake, I'm trying to get you guys some 10 baggers. I know Ryan is as well. All right, we got to go. I don't want to even go through my long diatribe today. I just want to say bye. Thank you for supporting this, not only the channel, but supporting every time the Fed comes on. I had to have Ryan on today because we normally do it on Wednesdays at AMA, but because of Election Day this week, he moved it to Thursday. But I couldn't have done this by myself. I just wouldn't have done it by myself. Got to have Ryan. All right, move over, Apple. There's a new girl in town, Palantir. Ooh-wee. I'm up. And your Uncle Glenn has been talking to you about Palantir over a year. Finally came into fruition. And tonight, between Ryan and I, between tonight and tomorrow night, we're going to try to put more NVIDIA type, Palantir's type stocks in your hands. So you got to watch the channel. And
yesterday I did a stock XRO. Who would have thought? Because we talked about it on the channel, first video ever on XRO, 10.5 cents when I did the video, 17 cents, almost a bag in 24 hours. So if you're new to the channel, make sure you hit that subscribe button. Glenn, you did a wonderful job here. Thanks for having me out here today. And hopefully we'll make some money to end the week.
Amen to that as I continue to eat my Skittles.
Oh, my God.
This is great.
Bye, guys. Bye, BB.
These Skittles, the berry Skittles, they're so good.
I'm coming over and I'm stealing some.
You're going to have it. All right, y'all. Have a great day. See you tonight for tonight's video. See you tomorrow for tomorrow's live stream and tomorrow's video. Adios.
See you.